Airbnb stock is reporting earnings tomorrow on Thursday, so let's analyze the stock because it's a really interesting one. The stock is down 10% in the past year, and if we take a look at the 5-year chart, down almost 40%. So it's a stock that hasn't performed that well in terms of stock price. However, despite the market cap being down 7%, their fundamentals have kept growing. Revenue is up 10% from last year, net income 43%, and EPS up 47%. Analysts have them rated as a buy with 22% upside, and they are now trading at a PE of 28 and 4 PE of 25. But this is a company that has significantly more free cash flow, and they are now trading at a price to free cash flow of 16. So off the bat, it actually looks a bit cheap, although we'll talk later about the valuation with the discounted cash flow model. And let's start by taking a look at their financials. Now, as we can see here, they have seen very good revenue growth in the past 10 years, growing from $2.5 billion to $11.9 billion currently. Now, obviously, they took a big hit, but this was during COVID, so we shouldn't take this growth into account when valuing the company. And in the past couple of years, they have grown at double-digit revenue growth, which is great. Now, if we take a look at their profit, it has also seen some very good growth. It used to be an unprofitable company, and they are now generating $2.6 billion in net income. However, as I've said before, they have a lot more free cash flow, which is something that I really like about this company, currently generating $4.5 billion. And this is because their margins are amazing. Gross margin is currently at 83%, profit margin at 22%, and free cash flow margin is almost around 40%, which is insane. If we take a look at the financial forecast, analysts are expecting revenue to grow basically at double digit for the next 4 years, which is really good, from $13.6 billion to $18 billion in 2029. Now, as far as EPS, even more growth, high double-digit percentages from $4.90 per share this year to $8.52 per share in 2029. If you apply a 20p to those 2029 earnings, it would make it around a $170 stock, meaning around 40% upside from current levels. And a huge positive that I believe is not talked about enough about Airbnb is their amazing balance sheet. They have $11 billion in cash and only $2 billion in debt. So they have tons of cash. And actually, one could argue that the company, instead of being worth $73 billion, it's actually worth $64 billion. Because remember that when you invest in a company, you have to think about that investment as if you were buying the whole company. And one thing that management has decided to do with that extra cash is buy back shares, which I think is huge for investors. As you can see, in the past couple of years, they have grown from 680 million shares outstanding to 628. So they've bought back around 3% of their shares annually. This is very positive for investors because you own more of the company and you're sharing the profits with less people. Now, it is important that share buybacks are done when the stock is trading cheap. And I believe Airbnb is currently trading cheap. For starters, if we take a look at the valuation ratios, they are currently trading at a PE of 28. However, as I've said before, they have so much more free cash flow that the price to free cash flow is 16. And I think free cash flow is more reliable than net income. So I prefer free cash flow to be higher than net income in companies. And very quickly, before we jump into the discounted cash flow model, if you want access to where I've shown all the stock data, which is stockanalysis.com, the best place for it, you have my code in the description. Now let's take a look at the valuation. In order to calculate the intrinsic value of the company and potential future returns, I use my Google Sheet, which tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. And as you can see, the intrinsic value according to my low assumptions is $109 per share, middle $144, and high $189 per share. Now, because the stock is currently trading at $121 per share, this means that if my low assumptions occur, you would get an 8.1% annual return on your money, middle 13.2%, and high 18.3%, which are great returns. Now, this is according to my assumptions, in which I have Airbnb growing revenue between 5 and 9% annually for the next 7 years, averaging a profit margin and free cash flow margin between 33 and 39%, and I assigned the PM price to free cash flow at the end of the 7 years of 16, 18, and 20. But if you want to make your own assumptions, I'm going to leave a link to a spreadsheet down below. Super simple to use because I've done all the calculations in the background, so you only need to input your assumptions. But now let's get into the risk of investing in Airbnb stock, which there are some, especially one which in my opinion is the biggest, which are the regulatory pressure is escalating. So Airbnb's most significant long-term risk isn't competition, it's regulation. First, let's talk about this because I completely agree. In my opinion, hotels and Airbnb are not competing for the same customer in the same situation. Airbnbs and hotels have different travel needs. For example, hotels is more for short-term stays or convenience, business travels, 1 or 2 night trips, and people who want services, for example, cleaning, reception, breakfast, etc. On the other hand, Airbnb, I believe, is more about space, long-term stays, and groups. For example, families that might need a kitchen or multiple rooms, a group travel as it is cheaper than booking 3 hotel rooms, longer stays for weeks or even months. Also, people use it for remote work, and there are also unique properties, such as cabins, villas, and countryside homes. But now let's talk about the regulatory pressure, because as this article explains very good, governments around the world are clamping down on short-term rentals as they grapple with housing shortages and affordability issues. I mean, it is true that some countries have had issues with rents, and Airbnb does have something to do with that. For example, in Spain, courts order Airbnb to remove more than 65,000 listings, one of the most aggressive crackdowns yet on the platform. In France, a court required Airbnb to pay over 8 million euros in tourist tax compensation, a precedent that could invite similar claims elsewhere. And in the US, cities like New Orleans have passed stricter laws requiring platforms to verify listings, prompting Airbnb to sue in response. And in my view, the perception that Airbnb is a contributor to rising rents and limiting housing supply isn't going away, and the possibility of more listing removals, fines, and restrictions remain high, which is why I'm going to remain on the sidelines for Airbnb stock for now, despite fundamentals looking extremely good and an exceptional balance sheet. I hope you found this video valuable. Let me know what you are doing with Airbnb stock in the comments, and I'll see you in the next one.